So good morning, everyone. I'm going to talk about some work that we've been doing on a survey called the Financial Inclusion Insights Survey, which has been supported by the Gates Foundation. It is and actually carried out by a company called Intermedia. They have done nationally representative surveys in 7 countries, Asia and Africa, on the extent of financial inclusion. The surveys were carried out at the end of 2013, 2014, so relatively up to date. And the survey data looks at access to bank accounts and mobile money accounts in particular, how people use these accounts, and why they use them or why they don't use them. We have been working on the South Asian data for India, Bangladesh and Pakistan, and we thought we'd kick off today with this because it just gives you an overview of the state of financial inclusion in these very important large countries. And I think I'm going to talk particularly about India and Bangladesh today because these two also provide a somewhat contrasting picture, which I think is useful. And the idea is to both look at the state of financial inclusion in these two countries, but also what are the opportunities and the sort of policy issues that arise from it. However, what I'm presenting is basically analysis of data from these demand-side surveys. So that's the constraint that we have. Before I start, I thought I would just say a little bit, just as an introduction as to why we think financial inclusion is important. Obviously, at the household level, having access to a bank account or a mobile money account provides people with a safe place to save, to build up assets in the long term. It also provides people with an opportunity to smooth out consumption when they face, for example, seasonal income variation or other risks that they face in their household economy. It will enable people to access finance when they get opportunities, economic opportunities that arise, and also potentially insurance products that can make people more resilient to risks that they face. And I think also access to mobile money and banking can also provide people with cheap, convenient ways to make payments, which obviously everyone has to do on a regular basis. So I think there's a lot of talk about financial inclusion being a sort of golden or sort of silver bullet that can transform people's lives, which is certainly true. But I think it's also just worth going back to what it is that actually financial inclusion can and cannot do. So that's really why we're looking at it. I'll move straight on now to some of the data from India. It's a little bit small, but anyway. The headline here is that in India, the data shows from the survey that about 54% of people are excluded from either mobile money or bank accounts. Perhaps not surprisingly, that level of exclusion is highest for women, also in rural areas. I think also we found that there's quite significant regional variation. So for example, in India, in the northeastern states, in Assam, Orissa and places like that, financial exclusion is running at about 66%. 2/3 of people don't have access to either of these services. And compared with places like Goa, where it's about 40%. In India, financial inclusion is basically about bank accounts. Only 0.2% of the population have a mobile money account. So what we're really talking about in the case of India, which is different from some of the others that we're going to go on to, is that it's through the banking system. One of the issues about this is that even though 44% of the population have a bank account, very large proportion of those bank accounts are actually inactive. According to the data from the survey, about 47% of bank accounts in India haven't been used in the previous 90 days. So, even though the headline figures on financial inclusion in India are relatively good, this does hide some particular problems. And I think that is quite a significant issue in the context of current policy in India. The the Prime Minister last year launched a really big program to try and boost financial inclusion called the People's Wealth Plan, which is working with particularly state banks, but also some private banks, to encourage people to open bank accounts. And there are certain incentives like subsidized insurance coverage, giving people these RuPay debit cards and things, which are an attempt to get people into the banking system. But the issue here is, this appears to be very successful. There are large jamborees where people show up and sign up for bank accounts. But the danger, of course, lies in the problem that is highlighted by the survey data, which is that such accounts can, and previous examples have shown, that they can actually lead to inactivity further on down the line. So there is a question that comes from the data on inactive bank accounts about, are these sort of mass campaigns which try and bring people into the system but don't actually change the quality of service that banks provide, or the cost, or the convenience? To what extent do they actually boost financial inclusion in the long term? So that's about bank accounts. It's also quite interesting to look at why people don't open bank accounts. About the vast majority, about 54%, say they don't open a bank account because they don't have enough money, which is sort of relatively simple. 26% say it's because they don't carry out enough transactions to warrant opening a bank account. Now, if you look at the data on the other transactions they're making, actually they are making lots of transactions. And I think the way that we interpreted this data is that the perception of people is often that banks are for wealthier people than them, that they don't perceive that they have enough money to open a bank account or to use it frequently enough. So that may explain why people aren't using their bank accounts actively. Some other issues that arose in the survey are high levels of distrust, particularly of private banking institutions, very strong trust in state banks, but not in private banking institutions, very strong attachment, perhaps cultural, to cash transactions, just feeling secure and safe and convenient, being able to use cash. There's some question about whether it's distance from a bank branch which can put people off joining a bank. In fact, we looked at the data on people who have an inactive account, and the people with an inactive account, the distance from the branch is usually higher than people who have an active account. So there may be a factor there that people are put off using their account because of the distance. I think the data showed that about 47% of people who have a bank account need to spend about 30 minutes to walk to the branch to use it. So even though when you ask people why they don't have a bank account, very few say it's because of how far away it is. When you look deeper down, it does seem to be one of the constraints to people using it. Just on the mobile money, at the moment, very, very few, I think I think it's 0.3% of people in India currently have a mobile money account. So as I say, financial inclusion in India is about banks, not about mobile money. One of the reasons for this is basically the regulatory framework in India, which allows, it's called a semi-closed wallet, where people can put money into a mobile money account and you can use it to buy airtime and things like that, or to put it into a bank account, but they can't take money out directly. So one of the key lessons from this is that the regulatory framework for mobile money is a big determinant of the extent to which people use it. So to finish on India, I think what we tried to look at was what are the opportunities for the growth of mobile money. Obviously, we've seen it develop very rapidly and strongly in East Africa and other places. And just looking at some of the data that comes out of it, there are a number of reasons to be optimistic. First is that about 84% of people in India either own or have access to a mobile phone. So that's very encouraging. In terms of ownership, there is a big difference between men and women. About 65% of men own a phone, whereas only 32% of women. So there is a sort of gender gap there. Obviously, in terms of accessing phones, a lot of women can access it, basically accessing their male members of their household. Other reasons to be optimistic are that there are strong policy drivers there to try and make universal these identification card system in India, which will allow mobile money and banks to sign people up a lot more easily because they have formal, or increasingly have formal identification. I think 47% of people already have one of these Aadhaar cards, the universal identification card. We know also from the survey that people are quite, even though they like using cash and find it convenient, that they are aware of the dangers of it, theft, losing it, spending it without due care in some cases. And we know also from the data that there's a high demand to make very frequent small transactions, which are ideal for mobile money use. The other interesting thing is that the data shows about 13% of the population are receiving payments from government. That's non-salary payments, so it includes pensions and it includes welfare payments from social protection schemes. At the moment, about half of those are being delivered manually by hand, and the other another 30% through bank accounts. But there is an opportunity there, and this is already being piloted. For example, the National Rural Employment Guarantee Act payments, some piloting there of payments through digital means. And we also found that those people in this survey who received those payments are rural, and they are generally poorer than other people. So if the government can start to spread digital payment through mobile money systems to the recipients of those schemes, there is a big opportunity to get people signed up. The situation in India is changing very rapidly, as at the end of last year in December, there was the Payment Banks Act, which for the first time will allow mobile companies to set up specialized banks that will deal only with payments through mobile money, effectively closing this semi-closed wallet system that they've been using to date, which will allow people to put money in and get it out, to send it to people who can then also withdraw the money. So the utility of the mobile money system in India is set to be sort of revolutionized in next year. So given the opportunities that we've outlined in terms of the demand side, the way that people are probably likely to use mobile money, the uses they have for it, then there does seem to be some quite positive signs for greater financial inclusion through the mobile money avenue this year. So I'll just go on briefly to Bangladesh.
Very, very briefly.
Oh, okay. Sorry. Yeah. Yeah. Here, basically, levels of financial inclusion much lower. But what I think 21%, according to the definition here, are financially included. But what this hides is that large numbers of people, 18%, are using mobile money but over the counter. So they don't have an account, but they do show up at an agent and use the agent to send money. And that's quite a large proportion of the population using bKash. And also, obviously, in Bangladesh, the microfinance institutions, according to this survey, about 19% of people using or have ever used a microfinance institution. So that is as high as for the banking system. It's not showing up in the financial inclusion statistics, but very, very significant there. Just quickly, I won't go on to that. That's about banks. But again, for the mobile money opportunity there does seem to be high potential in Bangladesh too. 89% of people have a mobile phone or have access to a mobile phone. Again, there's disparity between men and women. Those people who've used mobile money over the counter have experienced very few problems. About 3 or 4% of people say that when they show up at an agent, there is a technical problem with the connection, or that the agent doesn't have enough float to allow them to withdraw. So the experience of mobile money over the counter has been very positive to date, and people say that using mobile money has also widened their financial options considerably. Again, there are government systems for social protection programs that are piloting the use of mobile money to make digital payments to the recipients. So this again, we think shows that there is significant potential for the growth of mobile money. The big question in Bangladesh is how the mobile companies can get people to sign up for accounts, because the moment they're using over the counter, they're not recorded as through the Know Your Customer system, and also they're not therefore able to access other bank or financial services because they're just using it over the counter. And I think that is the sort of take-home recommendation for Bangladesh, is the question of how to move people over into mobile money accounts from using it over the counter. So that's, I think, two contrasting situations there. We did some work on Pakistan, which I won't go into. It's actually quite similar to Bangladesh in some ways. But I'm sure our BRAC colleagues will have some interesting things to say about how they've been using bKash in their programs over there. Thank you.
Brilliant. Thank you. That was great. Could I just ask you before we move on? So that's a good snapshot of the position. But what does the moving picture look like? Let's say in India, is it is there a strong upward curve? Is it plateaued or?
At the moment, it's just waiting for this regulation to kick in. It's really low, and very few people even know about mobile money because it's not the awareness of mobile money is pretty low. But there have been, I think, 3 or 4 companies expressing interest in setting up payment banks, and if that occurs, then there seems to be a lot of optimism that it will rocket in the next year or 2.
Mm-hmm. And what about you made the point in India that I can't remember the exact number now, but around half of the population, or slightly less than half, have some sort of banking account. Mm. But what about if you included rural credit and finance institutions?
The figures are what we found quite surprising. I don't know whether it's a problem with the survey data, but very few people are using informal systems, cooperatives, or MFIs. It was much lower than even ROSCAs. People were not saying that they were using that very much, which intuitively doesn't sound quite right, because as we know, there's all sorts of various informal financial mechanisms there in India which people use on a daily basis, but according to the survey data, it's much less use than in Bangladesh.
Okay. Thank you.